It's Corona time though. I know you guys heard about that coronavirus. You guys gotta stay safe. I'm gonna be drunk after this video. This is my third take. In all seriousness, guys, I really want to make this video because a lot of people are wondering, how is the coronavirus affecting the real estate market overall here in the United States? How is it affecting us here? So before you understand that, I want you guys to understand that the coronavirus is affecting the stock market very badly. Obviously, a lot of you guys are aware of that. I actually seen some of you guys share a couple of things about the stock market. Basically taking a huge plunge, losing a lot of points. I know as of this week, we're in February 29th. We're at the end of the month today. Within this past week alone, the stock market has been down 3,500 points. That's very low, okay? I mean, super low. Over $3 trillion lost in the stock market. So what's happening? Why is the stock market losing so much money? Again, I'm going to go ahead and explain exactly why people are doing that and what is it that's affecting us, right? So in order to understand this, you're going to have to take a little bit of an educational course with me. So bear with me, guys. I'm going to go ahead and write. Keep in mind, I might not have the best handwriting, but again, bear with me, okay? So I'm going to go ahead and write stocks on one side, okay? And then bonds on the other side. So what's the difference between stocks and bonds, right? So in order to understand, stocks are international, okay? And stocks are sold international on different exchanges in the US. They're sold at places like NASDAQ, New York Stock Exchange, or the American Stock Exchange, otherwise known as Amex, okay? So I want you guys to understand, stocks are what? International. Bonds, on the other hand, are not sold in central exchanges, okay? They are not international, basically. So that's the difference between stocks and bonds. Obviously, there's a ton of other differences. I know there's going to be some experts on this again. My handwriting is not the best, but you get the point. They are not international, okay? Bonds are here in the US. So what is it that people are doing with the stock market right now? A lot of people are pulling money out of stocks, okay? Why? Because the stock market is a lot riskier than a bond is. A bond is backed up by the federal government, okay? You got to have that in mind. Bonds are a lot safer to invest in opposed to stocks. You do got to keep in mind, with stocks, it is a higher risk with a higher rate of return, right? But if you're a smart investor, with the coronavirus, you're going to pull all that money out, invest it into bonds because it's a safer investment. But you do got to keep in mind that it's a lower rate of return. That's just the way bonds are, right? So investors are pulling their money, putting it in bonds. And how does that affect the real estate market? Again, when investors are pulling out their money, and there's a high demand for bonds. Remember, everything has to do with supply and demand in life. It doesn't matter what you do, who you are. Supply and demand is always going to be a thing. I know you learned that in school. You're probably learning that now. Supply and demand is huge, right? So if there's a huge demand for bonds, what do you guys think happens in terms of pricing? What do you think happens in terms of interest rates? You got to keep in mind that the bond market competes with the mortgage market, right? So if the bond market is in high demand, a lot of investors are investing money in the bond market. That's causing prices to go up and interest rates to go down. Why do interest rates go down? Because the bonds are saying, hey, we're in such high demand, we're not going to pay out a big return since we're getting a lot of people wanting to invest into bonds, right? So since interest rates are going down, guess who wants to compete with the bond market? Mortgage market. So if bond market goes down, interest rate goes down, interest rate on the mortgage market goes down as well. That's amazing for you guys. So when lenders are telling you guys that rates are at an all-time low, guys, believe them. They're not lying to you. They are historically low because of what's going on here. Unfortunately, there's a lot of bad things going on, but you got to be able to use the bad for the good, right? So to answer your guys' question, how does the coronavirus affect the real estate market? That's how people are pulling out of stocks. It's an international thing. Investors are selling their stocks and reinvesting it into bonds. Bonds are giving low rate of returns, causing the mortgage market to decrease their interest rates to stay competitive with the bond market, hence giving you guys better interest rates for your home. So if lenders are telling you, again, historic rates, guys, believe them. Now's the time. You get more purchasing power, more money in your pocket, more buying power for you. Until next time, stay tuned.